If you manage your own investment but struggle with a trade-off between performance and principles, this is for you. The Rocklinc Principled Equity ETF, ticker RKLC, was built for investors who want strong equity exposure without compromising their convictions. RKLC applies Rocklinc's time-tested approach with disciplined screening, long-term thinking, and a principled investment framework, so you can feel confident in the investments you hold. If you're a self-directed investor looking for a more intentional ETF, learn more at rocklinc.com/ETF or contact the Rocklinc team at info@rocklinc.com. And we're back with more on News Talk Saga 960. So very glad that you could join us in our final segment of this Monday, February 23rd. Jonathan Wellum joining us, CEO of Rocklinc Investment Partners. Welcome to the show once again, Jonathan.
Great. Thank you very much, Mark. Again, good to be with you.
Rocklinc, of course, is our terrific sponsor. I've got to ask, because Doug Ford going on CNN today, and here's what he had to say.
I think there's 33 Senate seats up for grabs. 20 of them are a Republican. But we saw what happened in Congress. We saw what happened in the Supreme Court. The walls are closing in, I believe, on President Trump right now, and he's feeling the pressure. So a lot of these jobs are border states that are being affected, and he needs those seats. So if it continues on, people are they're gonna be unemployed, and which will affect the midterms.
Well, fact check here. The U.S. economy is humming along at, I want to say, almost 5%. You would probably know better than I, Jonathan. Jobs are returning to the United States, including along those Rust Belt states that border Canada, like Michigan and Illinois. When we lost 1,000 jobs at that plant in Brampton, those jobs went to Illinois. You know, there's all sorts of commitments by automakers around the world to open plants in the United States and to revitalize that country's manufacturing base after years of hemorrhaging jobs. I just don't know what Doug is talking about. That's one. Number two, this strategy is not working. It hasn't worked since he started it, and yet he hasn't changed one iota. He keeps doing the same thing, mouthing off, thinking it's going to score points or help us. Help me understand what's going on here, Jonathan.
I can't help you understand that. I think it's absolute insanity. This is idiocy. He's being completely juvenile. It's dangerous. Ontario is in a very weak position. We have one of the largest sub-sovereign debts in the world. It's over $850 billion. It's a massive amount. We can't even, we can't fund our hospitals. We're losing our manufacturing base. We can't get major mining projects developed. I'm not sure what he's talking about. Our unemployment's going up. Jobs are not being created at all, and money's leaving the province. And so we're losing. He should shut up and start negotiating intelligently and rationally with the United States, which is a powerful, strong country. These plants, it won't matter whether Trump's in office or whether it's a Democrat down the road. Once these plants leave and they start going back to the States, they're not coming back. What's he talking about? So I don't understand any of his strategy. I think it's absolutely outrageous. And he's basically creating permanent harm to Ontario. And we're going to see, again, a continued drop in the standard of living in this province. So Doug Ford, keep quiet, start negotiating, use some of the strengths that we have. And you better be nice to Trump and the United States, because they have a lot more leverage on us than we have on them.
Yeah, unfortunately, I think that ship has sailed in terms of Ford getting on Trump's good side. He's said he's just dragged this on for too long. And of course, we've got negotiations coming up. And Trump can either take or leave CUSMA, probably leave it. And so it's us that are going to pay. I mean, right now, we're not feeling it anywhere near what we could end up feeling, because, of course, 85% or thereabouts, 75%? Is it 75 or 85% that's covered under CUSMA? I think it's 85% of our
It's a large portion. We're already under the benefit of Kuzma right now. So you're exactly right. We have not felt the impact that we're going to feel if we don't negotiate intelligently and rationally and start working with the United States.
I mean, we have the worst possible people negotiating these deals. They have utterly and completely failed, whether it's Dominic LeBlanc, and now, of course, we've got somebody else down there, Janice Charette, who's a career bureaucrat. Yeah, I just don't know what they're. It's almost like he wants those negotiations to fail. But let's talk about this, because I guess it was a big shock over at the Globe and Mail, the fact that our per capita GDP was lower than Alabama's. Canada's nominal GDP per capita in 2024 was about $54,348 USD, while Alabama's was $61,846 USD. And so this means the average Canadian produced 12% less economic output per person than the average Alabaman that year, 2024, reversing a situation where Canada was ahead by 10,000 as recently as 10 years ago, well, a little bit more, 2014. This is not good. This is another reflection that we have gone down the wrong path in terms of our economy, Jonathan.
Absolutely. We are falling behind country after country after country. Why is that? Well, we're not investing in the country. We're not putting capital back into the economy. So our productivity continues to drop. We're getting less input in terms of labor contribution or capital contribution. We've blown up our immigration so that we've just added so many people to our country, which we cannot assimilate, and they're not creating the wealth at all. In fact, in many cases, they're a drag on the system. We've got high taxes. If you compare our taxes with Alabama or most of the states, our taxes are much higher. We're talking 50% plus income taxes. The rules, the regulations, the red tape is much more extensive than we see down in the United States. And our we're not developing our resources. Carney keeps talking about, fast tracking. Nothing's been fast tracked. Nothing's happened. Same thing with Ford. He talks about what's going on. He talks about what's going on in the northern Ontario, and that's, again, nothing's happening up there also. I mean, so they're slow walking everything. And so, if we're chasing capital out of the country, we've already talked about the United States. A lot of that capital is going south of the border, intellectual capital going south of the border. How can we possibly be growing our GDP per capita? It's impossible. We're doing everything to harm the GDP per capita.
Yeah, absolutely. And I'm going to ask Grok here, what's Alabama's economy like? Because I think people in Canada tend to thumb their nose at southern states. I guess they can't do it to Florida anymore because, I mean, Florida's population is bigger than Ontario and Quebec's combined. And I dare say their economy, I have to double check that, but I'm sure it's.
Yeah. I mean, the Texas economy is larger than ours. And I'm sure Florida, if it's not larger, it's borderline almost right.
Close. I mean, it's as of early 2026, Alabama's economy is performing strongly, showing robust growth in recent years, low unemployment, and record-breaking economic development activity in 2025. So we're going in opposite directions. Our economy in Canada is getting weaker, and Alabama's is getting stronger. And I think the biggest problem is that Canada has opted for more government rather than a freer market. I mean, Alabama is known as a low-tax, low-regulation state, which is open for business and wants to have more people working and opening up businesses, whereas Canada has gone the other way and said, oh, no, let's have more government. Let's spend more. Let's borrow more. Let's have more regulation. Let's have higher taxes. Let's tax the crap out of our existing companies so that they leave and go somewhere else. It's like, this should be no shock to anybody. Rather than embracing free market principles of low taxes, low regulation, and throwing the doors open to business and saying, come on in, we're going to make it as easy for you to make money as possible, we do the opposite. It's absolutely ridiculous. What say you?
Well, again, you go back to just look at the numbers. In 2015, our debt to GDP at the federal level, and you always have to include provincial, but at the federal level was down to 31%. It was one of the best in the industrialized world. Right now, it's 65%. They've doubled our debt per GDP at the federal level alone in the last 10, 11 years. And so it's crippling. And as you pointed out, not only is that debt's gone up, I mean, they've just ratcheted up the size of the state, the government, its bureaucracy, its interference in the private sector. At the provincial level, we've got provinces that are out of control, including Ontario. Now we see BC. Some of the numbers coming out of British Columbia are just shocking. Their deficits are close to $10 billion. Their projected deficit next year is going to be now in excess of 13, 14 billion. So they're also careening out of control. And we're seeing the jobs leave there. The lumber industry is under stress. They're closing down. The regulations are crushing a lot of the resource sector in that province. So right across the board, socialism and big government is crushing the private sector, and money is leaving. And when you've got, so many of the states down in the U.S. being so much more attractive, of course, that's where the capital is going. And Trump is winning versus Canada. So elbows up is not working at all. And we need to put our elbows down. We need to start thinking about how we're going to grow the economy, how we're going to invest back in it, and get rid of the regulations, cut taxes, and start to cut deals with the United States and start working with them rather than throwing up all this opposition.
And it's interesting, I think you raised the issue of immigration. Explosive population growth by immigration diluted per capita GDP. Right, because per capita is per person. So when you bring in millions of people who have no real skills and aren't really producing, then of course that's going to bring down our GDP. It's going to fall relative not only to states like Alabama, but to some of our G7 partners,
Yeah, and you've also weakened our dollar. So when you're looking at our wealth versus the US dollar, if you go back to 2011, when Harper was in power, our dollar was actually higher than the US dollar. And even when Trudeau was first elected, we were sort of up in the mid 80 cents area back in 2015 or so. So we've seen our dollar drop down to the low 70 cents. So, that's punishing us also from a wealth perspective because our dollar buys less hard assets, goods, commodities, which are all priced in US dollars. And so again, our standard of living is dropping because it's being reflected also in the value of our currency.
Can we talk about the markets a little bit? I mean, they seem pretty choppy. Last time I checked, the Dow was down 800. I mean, and there's a lot of fear around AI. Now, Rocklinc invests in really top quality companies that make money, that have good cash flow, and have a strong future. But overall, the market is a little bit afraid of AI. Do you understand what's behind that fear and why it's having an impact on equity prices?
Well, right now, in the last little while, the AI, for a while, people are looking at AI as an enhancer, which it will be to efficiency. Less jobs are needed. You can do more with less individuals. So, productivity enhancements. But more recently, they're starting to look at AI and they say, how is it going to undermine some businesses, particularly software companies? There's businesses that, again, software companies where AI is going to allow, it appears is going to allow in various degrees, people to replicate software development on their own. In other words, they won't have to go to some of these software companies, or it's going to put downward pressure on the pricing power of some of these software companies. And so that's what was being hit pretty hard, like Adobe, Intuit, even Microsoft and some of the things that they're doing. IBM is down a lot today because some of the programs they have could be replicated by AI. And so this is what's washing through the market. And we really won't know what the total impact of AI is going to be for some time. We'll have to see this quarter by quarter. And so people are basically just throwing out the baby with the bathwater right now and just saying, okay, we want to get out of this sector, this broad AI, software sector, because we're not really sure how it's going to impact these businesses. And I can understand that as an investor. When we look at the market, we're we're looking at value opportunities, and we're not sure about some of these business models either. And so we go to the sidelines and just say, listen, let's go where there's more certainty. Let's go where there's more predictability. And let's see how this unfolds over the next couple of quarters or next year or two, because this is not going to go away. AI is becoming more and more powerful, and it is making certain jobs and certain business models redundant. And to the extent that that happens, that's going to cause problems with some of these stocks.
Which makes it all the more interesting and understandable why Trump wants to repatriate manufacturing. I mean, even though some of those jobs are probably going to become like robot jobs after a while, a lot of them might not. And so, repatriate all those jobs, bring them back to the United States the way Trump wants to do that, and strengthen the economy, even as AI and I guess robotics looms as a larger factor. Because, I mean, as I look at manufacturing jobs, I mean, a lot of companies are going to be saying, why should we hire people when we can get robots? Yeah, the robots are more expensive, so you have sort of the capital expenditures of having to purchase these things, but they'll work 20 hours straight, and they don't take breaks, they don't go to the bathroom, they don't take lunch, and they'll just work all the way through it. So a lot is going to change in the manufacturing in that sector, and it's interesting that it's happening at a time when Trump has imposed these tariffs in order to repatriate those jobs. I don't know if you have any thoughts about that and how you factor in, say, China and some of the other manufacturing giants around the world. I know it's a loaded question, I know.
Yeah, I mean, Trump is juggling a lot of things, and he has to. I mean, it is a complicated global economy. You are deglobalizing because you've now saddled up to people that are not your friends. And so you've got reliances and dependencies on countries that you really don't want to be dependent upon, China being exhibit A and the biggest one. And so you want to bring those back. And to the extent that there is robotics and there's automation, yes, but that will also, as we found out all down through history, provide other opportunities in other industries that we might not even understand or see right now. Human beings have lots of needs, and there's services that will be created. If robots are doing something else, there'll be other things that human beings can do. The key is you don't want to be vulnerable. You want to have your own manufacturing in your own country. You want to be creating your wealth within your own borders and not spreading it all over the world. Where there are opportunities to work with other countries and negotiate and trade, you're going to do that. But again, what Trump is doing is he's making sure they're not vulnerable anymore. And he's bringing back a lot of wealth creation for the middle class and for the blue collar worker, which has been eviscerated over the last 30 years, given the globalist agenda to basically outsource and get rid of all that wealth creation in the West and put it in the East. And so again, he's reversing all that. It's not easy, and it's going to be messy. It's not going to be, simple at all. It's not. But I think the goals are exactly what he should be doing if he's going to bolster the American economy and continue to grow it at a faster pace than the debt, so that they can, again, at least survive some of the challenges that they have in the future.
Yeah, meanwhile, we're focused on managing decline. That's our managing decline. Let's talk a little bit about how people can find out more about the services offered at Rocklinc.
Yeah, best is our website. So rocklinc.com, link with LINC, C at the end of link. And you can email us at info@rocklinc.com, and we'll respond to you immediately. And we've got lots of information on our website, and we'll talk to you. Give us a call, send us an email, and we'll follow up with you pronto. We'd love to meet some of the listeners, and we've already had quite a few of the listeners sign up as clients, and love to work with them.
Well, that's great to hear. Jonathan Wellum, thank you so much for coming on the show, as always.
Great. Thank you very much, Mark.